Back today, I want to look about the financial statement of a manufacturing entity. So let's dive in. We are going to start with classification of costs. So we have the classification and apportioning cost between manufacturing and selling and administrations. So for this manufacturing entity, they have the direct material cost. So these are those materials used directly in the manufacture of products. That is, they can be materials that can be identified in the final product, e.g. the manufacture of tables, direct material cost, which consists of timber, nails, glue, etc. Then you have the direct labor cost. These are wages paid to those who are directly involved in the manufacture of a product. So, e.g. those who are involved in the manufacture of that table. Then you have the direct expenses. These are the expenses that are incurred in the manufacturing of those products. Then you also have and before that, we know that the sum of all these direct costs is known as the prime cost. So it is known as the prime cost. Then you also have the indirect manufacturing costs, or fact. These are any other expenses apart from the direct cost for items being manufactured. So there are those any other expenses and apart from those direct costs. Then you have the administrative expense. For administrative expense, these are expenses that are administrative in nature. So expense incurred in the process of planning, controlling, directing the organization, e.g. office rent, office electricity, depreciation of office machinery, secretarial salaries, all those. Then you have the selling and distribution expense. So these are expenses incurred in the process of selling, promoting, distributing the goods manufactured, e.g. advertisement expense, carriage outward, depreciation of motor van, salesmen salaries, all those. We call them the selling. Then we have the finance cost. So these are the expenses such as bank charges or the discounts allowed. So we call them the finance cost. So that is all about the classification. So hope we are together. You have taken some few notes as we continue. So let's go to about the manufacturing account. So among the financial statements of a manufacturing entity, we have the manufacturing account, income statement, and statement of financial position. So we are going to start with the manufacturing account, which is an account prepared by manufacturing concern to ascertain cost of goods manufactured during the period. So there are various ways to do it, but here I'm going to show you the steps that we follow in manufacturing account, in preparing the manufacturing account. So first we add the opening stock of raw materials, purchase and subtract the stock of raw materials. So this is going to get the cost of materials during the period. After you do that, you add the opening of raw material purchases and you subtract the stock of raw materials. Then you have to add all the direct costs to get the prime cost. Then you shall also add all the indirect manufacturing costs. Then you also have to add the opening stock of work in progress and subtract the closing stock of work in progress to get the production cost of all goods completed in the period. So this is because the work in progress cannot be sold and therefore should not be included in the trading account. So that's why we are subtracting the opening and the closing. Then you have the manufacturing account. When completed, we show the totals that is available for sale during this or during the period. So this one is the one that shall be used in the trading account in places for purchases. So we are going to show that. So that is all about the manufacturing account. So we can continue as we take some few notes. So we have the statement of comprehensive income, which will be similar to that of a sole proprietorship except for the following. So we need to know the income statement. Manufacturing account, we are told it shall be similar to that of a sole proprietorship, except the purchase will be replaced by finished goods at transfer price. That is one scenario. The opening stock to be used in the statement of comprehensive income is the opening stock of finished goods. Then, after obtaining gross profit, we add the element of factory profit if we had marked up the goods before transferring them from the factory. So those are the scenarios that we have to differentiate it. So any question from there? So we can continue as well. So let's find out how we are going to treat the treatment of loose materials. So we have these loose materials sometimes in a manufacturing entity. The cost of loose materials consumed during the year is considered as a factory overhead in the manufacturing account and have to be determined. So how are we going to treat these loose materials? So let's see how we can do them. We shall look at the format. So this is the treatments of loose material. So we are going to start with the opening stock of loose materials, which is adjudicate amount on the side. Then we also have to add the purchases of loose materials. We add the total, then we less the closing stock of loose tools, and then we shall obtain the cost of loose tool consumed. So this is how we treat the loose materials or the loose tool. So I can give you a minute, take a screenshot on that. And let's continue. We have now manufacturing account. I'd like also we look at the format for manufacturing account as I have discussed above. So we start with the title. We can name us as XYZ Limited manufacturing account for the year ended 2020, either 2021, that is the year. Then we have now the opening stock of raw material. We are going to start with the opening stock of raw materials. Then you have to add the purchased raw materials or the carriage inwards of raw materials. Then you have to less return outwards. We are going to have to obtain the cost of materials available for production. Then you have to less the closing stock of raw materials. So after we deduct that, we get the cost of raw material used. After cost of raw material used, we add direct labor and direct expenses so that we can get the prime cost. So after adding all this, we get the prime cost. Then you have to, sorry for that. We have the indirect manufacturing costs. So we are going to subtract them. So we can subtract. There are things like indirect labor, indirect expense, heating expense, all the expense. So the writing expense, depreciation of factory equipment, depreciation of factory van, factory salary wages, factory rent. So we are all going to get all the indirect manufacturing cost or the indirect total indirect expense. So we subtract them from the prime cost, and then we add the opening work in progress, and we raise the closing work in progress, whereby we are going now to get the total cost of production for goods completed. So that is the total cost. Then we have to get now, after we subtract, we are going now to get the manufacturing gross profit added. So from our total cost of production, we are now going to get the manufacturing. We have to add the manufacturing gross profit if we have, and then we are going now to get the finished good profit added. So that is the final amount that we are going to get. So this is a scenario of preparing our manufacturing account. So I can give you some minutes. So let's look at preparing the income statement of this manufacturing entity. So we are going to start the same case with our title, XYZ Limited Income Statement for the year ended that was December 2022, 2025 in a year. So it's the same case with the sole proprietorship. So we start the sales. We are going to less all the cost of goods sold. We can add the opening stock of finished goods. We add production costs of completed of good completed brought forward. As you can see, then we are going to raise all the closing stock of finished goods. We are going to get the cost of sales profit. The cost of sale, we subtract it from the net sale to get the gross profit. So this is our gross profit. Then we are going to now to deduct all the expenses. So we might have so many expenses, but we are going to take a few. So we have office rent, as you can see. Then we have office electricity, depreciation of office machinery. Then we have selling and distribution expense. Then we have advertisement, delivery van expense, carriage outward, salesman salaries. All these expenses, we subtract them from the gross profit so that we get our net profit or a loss. So this is a scenario when you are preparing the income statement of a manufacturing entity. So there is something I'd like you to note, that expense should be pointed as follows. So all the indirect manufacturing costs should be charged in the manufacturing account. Then administrative expense shall be charged in the profit and loss account. Then selling and distribution expense charged in the profit and loss account. Financial charges charged in the profit and loss account. So in our profit and loss account, we are going to charge administrative, selling and finance charge. So selling, administrative and all the finance, that's why you can see the selling and distribution here, expenses. But in the manufacturing account, that's why we get the indirect manufacturing cost. So as we can see, indirect manufacturing cost. So we have all the indirect labor expense, indirect expense, heating expense, all these. We charge them in the manufacturing account. So if you have any question, please hit me on the comment below. Also remember that I take personalized coaching. So if you have any specific topic, subtopic to be coached, please give me a hint and I'm going to provide that to you. So thank you. As you can take a screenshot on this income statement as we finalize. So yes, that is the screenshot, the income statement. Okay, thank you.